Broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. And good morning to our friends down under, and good afternoon to our friends across the ditch in the Shaky Isles. How's the volume, folks? Would you please just type in the question box if you can hear me all right? See who we've got. Nobody? Can't hear me, eh? Yes, you can. Oh, Mark, straight on the job. Good on you, mate. Good to hear from you. Yes, you can hear me. And Andrew as well, thank you. As usual with the slings and arrows of outrageous fortune. The NBN, our National Broadcasting Network, has decided to... hello, Greg. Good, mate. Our NBN has decided to have an outage today. So we're actually working off our mobile modem today, which my son has organized. He knows all about technology. Of course, I know nothing about technology, which is fine. So good to have you all with us. That's terrific. So Mark's a very long-term member, says Andrew. It's good to have you with us. And Greg's a wealth manager in Colorado Springs, and maybe somewhere else as well. So all of that's great to have you here. Okay, let's see what's happening. Excuse me. Right, Albert's with us. Andrew is with us. Colin. Deborah, welcome, Deborah. Nice to have you with us. And Doug's with us. And George. Oh, gosh, we've got a lot of people today. Jeff, Mark, good to hear from you. I had heard from you during the week, of course. The other Mark. Murph, of course. I think we're still hunting for those videos for you. Murph, they go back a long way. In fact, I know that we've actually done, I think we've done 20 with you over the years, but how many we've got left, I don't know. But keep me, I know Terry's on the job. I don't know if he's got the ones we have to you, but let me know anyway, would you, my friend? Thank you. Nathan, good to have you with us. And here we are. Everyone's here. Peter, our short-term trading guru. Steve's with us. Vicky's with us. Hello, Vicky. Good to have you with us. Okay, so with this mobile modem, folks, we may be having degraded coverage, but in any event, this will be recorded if there's any part of it you miss out on or have difficulties hearing. I think it's all right, but if it's not, the video is being recorded, and of course we will be posting that very soon after. So let's move on and see where we've got to. So the big banger this week so far, folks, was the big sell-off in gold, which happened on Sunday night. As soon as the markets opened, someone thought it was a good time to try and unload a heap of contracts. I think at 24,000 in total, and the market, of course, had a heart attack. Probably the worst time you could choose to do it. Very little volume. So one wonders. Obviously, there was a reason for it, probably liquidation. And it's going to be really interesting. And we're going to look at that later on, because it appears to the world when these sort of events happen that they're entirely random and caused by well, God knows what, but the reality is they're not random at all. And I want to show you that later on as we go on. So in the meantime, today I wanted to just show you, I've put up a video up at the top of the homepage, which says it's called What We Do For You, or everything you can find in the Daniel Code website. We've had a few new members lately who've asked questions about things that we've got on the website. So I've done just a short, brief video, well, not so brief, it goes for about half an hour, I believe, that shows you all of the main things we talk to you about on the website and the tools that are on there. And if you are new to the Daniel Code, have a look through that one if you would like to start off, and then, of course, get your free trial. Hello, Dick. Mr. Dick. Yes, I'm well, thanks, mate. You too. Anyway, that's there. That's a new video. We've got a more streamlined version of it coming up, but we've been having a few issues getting things posted with GoToMeeting or Log Me In, as it's called, and their change. I mean, I wish they'd stop changing things, but they don't. So here are the priorities, which you've seen before. Market selection. In practical terms, this is vital. Everyone has a favorite market or favorite type of market. I get so many new members say they want to trade the S&P and gold. That seems to be the standard choice. But if you've got, and of course, you know, we have Forex guys who only want to trade Forex, and that's fine. It's your choice. Do what you like. But the reality is that all markets work exactly the same, futures and Forex. They on the Daniel Code, they respond exactly the same. And being diversified across markets is a vital part of your trading strategy. So I do ask you to open your minds if you're someone, excuse me, the hay fever. It's spring down here and the hay fever is savage. The ability to look at other markets, I mean, they're just such huge opportunities at the moment. Some of these markets are really being terribly, terribly nice to us and rewarding us. But become familiar with the different market groups. You should be aware not only of Forex. If you're a Forex trader, I want you to start thinking about looking at some of the futures markets. I want you to think about grains, which have been fantastic this year. Bonds, it's a very good 30-year T-bonds, very good market. Metals, of course, everyone knows about them, and they've certainly been exciting enough this week, haven't they? Soft, coffee, sugar have been just great. So become familiar with different market groups. I promise you it'll improve your trading. And we'll see where we go. So today I want to talk about trend, and it's going to lead us into other areas. But these Daniel Code support and resistant lines and the blue lines, they plot support and resistance. And they're vital tools to define turns, both major and minor, together, of course, with our time turns, our proprietary time turns. Most of you know roughly what trend is about, but I've used the analogy of the ocean waves, because when you see an ocean wave, if you're fortunate enough to be able to look out your window and see them, that's pretty good. If not, I've probably seen a movie about it. I know some people don't live anywhere near the coast. In fact, a whole lot of people, in fact, the vast majority of you don't. So I'm very fortunate. But you know, you see the waves coming in and they break and they go out, and they break and come in, and the outflow goes out. But there's another force working as well, that underneath those waves that you see so easily just breaking on the shore, there's a stronger trend, which is the tidal forces. So you've got the minor trend with the waves breaking, rushing into the shore, and then the water going back out, doing it again and again and again. But the major trend is actually the tide. And over those periods, which are hours and hours long, the tide's either coming in or going out, or making the transfer from one to the other. And that's the way to think about trend. And for investors, people who are in stocks and shares, trend is vital, because that's really all they have to go on. And there's a real problem with that idea entirely, in my view. It causes just endless problems to folks. So these are the sort of basic things you talk about with trend, how you look at it, how you define it, short term, long term. The trend is your friend until it isn't. And then the question is, what is a trend? Well, a trend is very, very dependent on time frame. So Gann said you always have two or more trends running at the same time. And what he meant by that is that the trend that you're following will depend on the time frame you're looking at. We have always, we can look at 6-day charts and see a trend. But on the daily chart, that trend might be different. In other words, you could have a dominant bull market, an uptrend on your 6-day charts, or your 3-day charts go down to a daily chart, and you might find that that market is actually correcting. And the whole point about trend is a very difficult one for traders, particularly for futures traders. Because what makes futures so exciting and rewarding, of course, is the leverage, which means that it works both ways. It cuts both ways. It's a very sharp sword. You can't afford to be wrong for too long when you're trading futures. So bear in mind that when I'm talking to you about this, I understand that different people have different trading requirements, and that many of you have investments in the stock market, which is fine if you're brave enough. People often ask me about stocks, which I used to trade a long time ago, 30 years or more. But since I've been trading futures and Forex, I would give you my honest opinion that I think stocks are too dangerous to trade. Now, I know that's the complete opposite of the vast majority, but if you did understand how to trade futures and Forex, you would not be wasting a moment of your time investing in stocks. Having said that, of course, governments try very hard to make investments in stocks attractive. So you get all sorts of requirements from the various taxation authorities that you have mandates where you have to you get tax benefits only if you're trading stocks. And that applies to pretty much everywhere in the world. Learning how to identify the trend is the first order of business for people who are technical analysts. And all this stuff that's written about trend is really applying to equities, and it's applying to the brokers lament that markets always go up, and the charts in equities always rise from left to right. Well, then again, that's a question of time, isn't it? If you wanted your money out of the market in late 2007, you took a bath on it. But let's have a look at some of these tools that Investopedia and other luminaries talk about. This is an ADX, which is a very, very popular study. This is on Dow futures. And this study, this is just set at 7 at the moment. That's the default setting for most of these studies. No real reasons given for it. It's just the way it's always been done. But you can see that this indicator actually goes from 0 to 100, or some part in between. And this is the Dow that's in probably, an historic bull market. But you can see the period of this chart, which isn't that long. It goes from May up to the current time. These are daily bars. The ADX has never got above 50. In fact, it's barely touched 50. Just touched it, maybe didn't even touch it. So this is a market in an historic bull market showing no strong trend. The other suggestion that folks like to talk about are trend lines. And if you can connect two lows together or more than two lows, and it's facing up, you have a trend up. If it's facing down, you have a trend down. Well, this is the reality. This is the Dow. This is the Dow futures contract, which mirrors the Dow index. As you can see, also on daily bars, it never gets above the 50 on the study. And have a look at the trend lines. They change. I know that you can get trend lines to fit anything, but it's an inexact science at best, because if you just took the simple views of connecting a series of lows, you can see that the speed of the trend varies, and it varies dramatically. So sometimes you'll get a better result than others. This is the NASDAQ again. This is on daily bars. And this looks pretty promising on the trend lines, doesn't it? But how do you know when to change the trend lines? How do you know what's your rule going to be about a break? Is it on the low? Is it on the close? Where is it? And all of those things give you some thought. One of the more interesting things about trend lines, if you play around with them a lot as I do, I've played around with almost everything over the years in the search for knowledge, is you'll see that sometimes a trend line will go on after that trend is finished to give you some interesting information. And you can see here where I put the word Y, this trend line on the NASDAQ has gone from being support to being resistance. And you can redefine these sorts of charts very, very considerably. In my view, though, the most important thing that's happening with long-term trading is a belief system, and belief systems are powerful. In fact, belief systems rule your life. And I wanted to just touch on what's happening with this dreadful COVID business and the totally different experiences between the States and Canada and Australia. It's really, really strange that the way the authorities are attempting to deal with COVID are so different. And that's actually driven by the will of the people to a very high extent. The people are rulers, are politicians. Their main purpose in life is to stay elected so they can keep their snouts in the trough. And there is, to a degree, although you wouldn't think it on a day-to-day basis, that they are bound by essentially what the people want. So the USA is in a very, very, offers a very, very unique development, and it's quite shocking. I mean, I have spent a lot of time in the States. I actually lived over there for 18 months down in Louisiana, in New Orleans, and down around that Gulf country and around the bayous, and absolutely loved it. I just finished my law degree, and my father sent me over there to work with Tidex, Tidewater Marine, big oil supply company with the ships that tow the rigs on and off location, carry the drilling mud out to them, and supplies, and change crews, everything else that happens on offshore oil drilling businesses. And my father at that stage was, he's long dead now, of course, but he was the managing director of the Manly Ferries, Sydney Harbour Ferries, and he'd gone into a joint venture with Tidewater, or Tidex as they called, to build and run supply ships for the Australian offshore oil exploration business, which was just starting then. And they built a number of ships in Australia with the joint venture company, and it was those ships that found the oil wells that found the first gas down in Bass Strait. Pretty rough part of the world, Bass Strait. You get some decent storms down there. That's what makes the Sydney Hobart yacht race so exciting, terrifying, depending on your view of it. But all the time I've spent in America, I would say that the people most like us are Americans, and the people most like Americans are Australians. That would have been my comment. But yet we found with what's happening with this COVID pandemic that the reactions are entirely different. And I've told you before, fairly briefly, that the situation in Australia is and has been handled entirely differently to the situation in the United States. And that's basically because of a belief system. American people, folks, kids, are brought up with this primary belief of freedom and unabridged freedom, and any attempt by government to impose restrictions leads to a cry that, you're breaching my freedom. and this is an ongoing fight. It's going on every day. Well, it's only Americans that have that belief system, and they're taught it. That's what the Constitution's all about. That's what the War of Independence was all about. But it's taken to an extreme. Americans believe wholeheartedly that their freedoms are unlimited and intense. And apart from the obvious things like the criminal code, you have the right to do what you want to do, and that's why you've had over 600,000 deaths. Now, in Australia and New Zealand, it's an entirely different situation. Both Australia and New Zealand are islands. It's very easy to shut down access to the continent of Australia or the islands of New Zealand, close the airports, close the shipping. It's reasonably easy to do. Well, it's easy to do compared with what happens in the States, where you just couldn't even begin to think of it. But that's what's happened in Australia now. That essentially the airports are closed, the ports are closed, and you don't get in or out without the government's approval. And the end result has been that we've had very, very few deaths from COVID on a relative size basis. But it's also interesting how different it is between states. Basically, we have two main political parties in Australia. One's called the Liberal National Party, which is not liberal. It's essentially the Conservative Party, if you like, the party of big business, the Republican Party equivalent. And the other major political party is the Labor Party, which is the equivalent, I guess, of your Democrats. It's a hangover from the British Labor Party, which was and is dominated by trade unions. It's supposedly a party for the workers, but its policies have moved far from there in that time. But in Australia, we have 5 or 6 states, and all of them, leave out the Northern Territory, which is immaterial really, but all the major states presently have Labor state governments, or Democrat state governments, if you like, except one, and that one is New South Wales, which it starts just to the south of where I live and runs down the coast and inland, and it's the biggest, most populous state, and it's probably the from manufacturing business, it's the engine room of Australia. Now, the other big state immediately to the south of it's Victoria, and they've been a lesson to us of what happens with COVID when it's not controlled. But all of the Labor states have taken the view that it's the socialist doctrine, isn't it, that the states are there to bring a paternal view of management and to protect the people. And that's been a very, very popular view in this country and New Zealand, which also has a Labor government. But New South Wales is the only state that's had a Conservative government, a Republican government, if you like, might be the easiest analogy for you. And they've had a different view. They've had the view that government shouldn't be overruling, it shouldn't be imposing on people. And so they haven't had these complete lockdowns. By complete lockdowns, there's a whole debate about lockdowns in Australia. And what has been proven, and I know this will be hard for some of you to accept, is that a proper lockdown does stop the virus spreading. But by proper lockdown, you've got to know exactly what the rules are and enforce them. And what we found in New South Wales, where they've tried to bring a more laissez-faire attitude to it, is that when they've been forced to have lockdowns by various breakouts with this awful disease, a significant part of the community ignores them. And a significant part of the community is not covered by them. For example, this last, what's happening in New South Wales is they've had a breakout and it's got bigger and bigger. And the rule of numbers tells you that contact tracing stops being effective when numbers get up. In other words, you think of a person who's infectious with COVID, particularly this new Delta virus. It's many times more transmissible than the earlier version, which was called the alpha version of it. You can get it in a matter of seconds, whereas the previous belief was that the alpha version took probably 15 minutes exposure to infect you. Nonetheless, what we've been finding is one person goes somewhere else, somewhere new, and they visit 6 venues, and then you get 2 or 3 people infected. Pretty soon you've got 20 people infected. All of them are going to 4 or 5 different venues each day, and the progression becomes geometric, not linear. And at that stage, contact tracing just ceases to be effective. And that's what's happened in New South Wales, and that's what's happened in America. But the belief is what's changed it all. It's the belief of government, one government. All governments in the US are very, very reluctant to try to impose rules and systems that affect their population. Sometimes it's had to be done. You saw what happened with New York, having a lockdown for some length of time, but it wasn't effective because there are groups that the government won't try to enforce these rules against. The best example is in New South Wales, where the government, we've had a complete breakout of COVID after having the best part of a year with very, very few cases. In fact, none, other than those that are in mandatory quarantine. If you leave Australia, it's pretty hard to leave at the moment. You need the government to give you permission to do so. And if you get that permission and leave the country, when you come back, you've got to have a 14-day quarantine period, which is done. It started off as have 14 days quarantine at your home. That rapidly became apparent that people weren't abiding by those rules. So we finished up that we have a quarantine system where there are a number of hotels requisitioned by the government, and you go into one of these quarantine hotels and you're locked in, and it's supervised by A, the police, and B, the army. Here's Colin. People are going to live with COVID, never go away. We cannot have lockdowns every time we have an outbreak. The economy will be in ruins, more than it is already, of course. So there's the view of someone who is opposed to lockdowns. But I can tell you that governments run on polling numbers. And in the state where I live, which is Queensland, the polling has shown that the vast majority of people, what they want is protection from the virus, and they support lockdowns. So there you are. You see different belief systems, and that's what it's all about. And belief systems, of course, what rules what happens. So what's been found out, what we've learned through hard lessons, is that lockdowns don't affect reduce the spread of the disease unless they're perfect lockdowns. You've heard the old saying, practice doesn't make perfect, perfect practice makes perfect. The same with lockdowns. So it's got to get to the stage, it's at the stage here in this country where these lockdowns are government mandated, they're enforced by the police and or the army. And they're certainly effective if you do it early enough. But once it gets away on you, then it's not happening. And the little anecdote I was telling you was that the government, the New South Wales government, the government of big business, put a mandatory lockdown, including the building industry. Well, that only lasted 3 days because the building industry is the biggest contributor to the Liberal National Party, which is the governing party, the Republican equivalent, if you like, in New South Wales. And because they're the biggest contributor of funds, they've got the most leverage. So that only lasted for 3 days. So now you've got tradesmen everywhere going out, doing what they have to do, fixing problems for people, but of course that's also spreading the virus. So there's the difference, and it is more to talk about today is the basic faction, excuse me, that belief systems rule your life, and they do. So almost everything we're taught about markets is actually wrong. The winning percentage in options is that proof. About 85 to 90% globally of all options expire worthless. If you're two things that are doctrine is options and buy and hold. In either of those situations, you're actually entirely dependent on a belief system. And that belief system leads to bias. And worse than that, that bias is controlled by others. In other words, it's what the major analysts from the major brokers, institutions say that determines what you believe. From the point of view of trading futures or Forex, where the name of the game is leverage, that leverage cuts both ways. Having a belief system immediately gives you a 50% chance of being wrong. That's the first problem. The second part of the belief system is you'll almost entirely be adopted the belief system which is the majority. And in trading, that's a dangerous place to be. If you have to believe anything, be a contrarian. But when we get into trading the Daniel Code, it's entirely different to anything else you've ever seen. It doesn't rely on any other formats, completely a system unto its own. And it's very finite, it's very definite. The signals are either on or off. They're a light switch solution. You're not sitting there pondering what's the trend, because the more you think about your trading, and this will sound like a contrarian idea, but the more you think about trading, the more damage you'll do. So what I'm showing you now is let me make sure that this has changed for you. Yes, it has. No, it hasn't. Okay, so what happens here? Did I hit a wrong button? Let's move on. Now I've changed it, and that should change for you. Yes, it has. So this is a still from that marvelous movie, The Last Samurai, Tom Cruise in it. Wonderful movie. If you haven't seen it, you should. It's been around for years now. But there's this interesting scene where Tom Cruise, he's a American army officer who's washed up in Japan through one reason or another, and he's been captured by the Japanese, and he's living with them. He doesn't have the choice at the moment, but he's having to learn sword fighting, which was the dominant weapon back in that era. The picture on the right is him practicing with wooden swords, and he can't do any good. He keeps getting knocked around and beaten. And the young chap comes up to him and he says, too many minds thinking about everything. The answer is no mind. Now, I tell you this story because last week I had a client who's actually done a Daniel Code tutorial, and he's learning how to put that into effect. Now, this guy's particularly dedicated, a terrific worker, and he's gone through and found 15 or more markets, and he's worked through them with his Daniel Code paper trading, what he's been taught about trading time when he's done his Daniel Code tutorial. And he said it's marvelous, it's wonderful. All of these markets take a wide range, 15, and he took them for a period of 2 or 3 months, I think, and he said across all those markets, they average 35% on margin, on the account, not on margin, but 35% on your account per month. This is fantastic. This is fabulous. I'm so excited. I've never seen anything like it. Isn't it wonderful? Well, that was good. When he gets down to putting his trades on, he doesn't do what he does when he's paper trading. In other words, when he's paper trading and he runs through it, he's got a very agile mind. He's a very clever bloke. Um, he does it mechanically. In other words, no mind. Once he gets to putting his own trades on, then all of a sudden he finds other things to think about. And he has a view, he has a belief system. And that belief system is either the trend is up or the trend is down. And it's very, very hard to shake that belief system. We have another client. This one is a super trader. Very, very good. You've heard me talk about him before. Dean up in the really cold country up in Canada. And he is a very, very good trader, but he's got a limitation. And his limitation is that he's a grain producer. And he can't bring himself to go short on grains. And grains this year have been absolutely wonderful trading. But he has a belief system that if he sells a contract in grains, he's working against himself as a grower of grains, which is ridiculous. But that's his belief. It's very, very hard to change people's beliefs. And that's what happens with investments, long-term investments. You have a belief that this market's going to go up. Most of you believe it's going to go up forever. And you're missing out on some of the best trading opportunities that come around. And the great gift of futures, which is a gift, it's a marvelous thing, futures. And they truly are a gift. And the leverage is what makes them perfect trading vehicles. But futures and Forex pay exactly the same both ways. In other words, they pay exactly the same going up as they do going down. And you can be short. You can sell a contract. Excuse me, you don't have to own the underlying. You don't have to go and try to borrow stock so you can short it. The whole of the stocks and shares business is designed to make shorting difficult. Whereas in futures, it's just the other function. You're either long or you're short or you're flat. And one's as easy as the other. But all of that sort of trading requires a narrative, and you believe that you should be holding stocks because that's the narrative at the moment. Eventually, that narrative will change. But by the time it changes, the damage will be immense. So trading futures with the Daniel Code does not require a narrative. Every single daily bar provides all the information you need to create the optimum orders for the next day's trading. In other words, we can get a high probability trend from each single bar. I know that sounds a bit weird, but that's what you need to do when you're trading futures and Forex, because that leverage bites both ways, and it can bite very, very deep, very, very deeply. So we only need, when we're trading futures and Forex, I know I talk more about futures than Forex in these sessions, but they're exactly the same. They trade almost exactly the same. Certainly they trade the Daniel Code signals exactly the same. So with the Daniel Code, or with trading futures or Forex, we need to know no more than the probable trend. Everything that happens in trading markets is probabilities. Sometimes those probabilities get very high, but they're still probabilities. And because of the leverage, we need to be vastly more accurate and attuned than mere investors. Now, to say mere investors might sound like I'm damning them with faint praise, and I'm not. There are some wonderful investors out there. There are people who've devoted their lifetimes to it and do very, very well. But they are always relying on a narrative. So at the Daniel Code, at trading futures and Forex, because of the leverage, we need to be vastly more accurate and attuned than long-term investors, which means we need to accurately measure what markets are doing. And you can't measure properly unless you understand the Daniel Code and know what the Daniel Code is telling you. So markets are actually talking to us. They're actually trying to tell us what they're doing. But until we got the Daniel Code, we didn't have the language to understand. And when I do a tutorial, those of you who've done tutorials, I actually show you parts of the chart and say, this market is trying to talk to us. This is what it said. This is what it means. This is its trend. These are its limits. In other words, once you can measure accurately, you can understand. If you can't measure it, you don't know what it is. And that's the old adage for engineers. In fact, they'll go further and say, if you can't measure it, it doesn't exist. So you do need to be able to measure markets, and the way to measure them is with the Daniel Code. So this is a chart of the fourth seal angle. So I've got to the stage of telling you that most of those traditional things you hear about with trading don't work. And the reason they don't work is they're all dependent on a narrative. And the narrative will change over time, but you will be late to the party or late out of the party. And on this chart, you can see there's a blue line, which is sitting on the February 2020 pullback. And that was the first time that anyone started to think that COVID could be a problem. It had been running for a while. It had a couple of little corrections, but that was the COVID's a real problem moment. And that's why we're running a time cycle from there. Now, this chart, I think, is a day out of date. I don't think it's got today's data on it, but I want to show you some of the things that work and should be part of your belief system, as opposed to taking advice from Nomura, Goldman Sachs, whoever else are the opinion leaders, excuse me, in markets that you're interested in. And this is the fourth seal angle. So you're probably familiar with the fourth seal from me talking about fourth seal time cycles, which is one of the primary purposes for the fourth seal. The fourth seal angles are slightly different. And the doctrine basically gives us two different types of angles. We have a fourth seal and we have a fifth seal. The doctrine of the fourth seal says that a line that starts from a low before the low, that goes through the first correction, will forecast the ultimate high, or will forecast a future high, is the proper expression. And it does. And I put this on to show you that this is the S&P index. This is the 12-day chart. It's butting its head right up against the latest fourth seal angle. And these angles are powerful. And it's not only doing that, it's also on a cycle that's expiring. It'll be a 29-day cycle that's expiring. So I just wanted to show you that. This chart here, I've added the numbers, the Daniel Code blue lines, for the S&P index. We don't publish that chart in members' charts, but this will show you the levels where it's finding resistance. That's very long term. Let's have a look at how long that is. If you have a look at that, this fourth seal is actually beginning. It's running from the previous low. It's running from a part of the historical, this is a 24-day chart, the historical rally into the dot-com high in 2000. So this is a very, very long-running, very, very slow-moving angle. And it's an angle that's been on my charts for literally years and years. It was created before the dot-com low in 2002, but at that time it looked so ridiculous I didn't bother looking at it. But amazingly, the market's up there, right at those sorts of levels now. That's equities, of course, I'm talking about. Okay, so let's talk about the things that do work. Have a look at this chart here. This is gold. This is a 12-day chart. This is COMEX gold. And the line on the left, you can see there's a angular line that runs all the way up to the August 2011 high in gold. And that's actually a fifth seal line. And the doctrine says that a line drawn from a low before the low through a swing high will forecast a future high, as it does. In fact, I was running a tutorial in Taupo right at that time in 2011, and we've still got members here who remember the first time I taught this in Taupo way back in 2011. That was a very, very interesting high to trade. But look what's happened since then. Have a look at those red lines for Daniel Code support. Okay, now the first one going down 1554, that looked pretty rough, doesn't it? Market didn't really observe that. Then it goes straight through the next one down and the next one down. Eventually, it gets down to the 1186.8. I think it is. My eyes are not as good as they used to be. Yeah. And that stops that particular run down. And then you can see another angular line going from the high before the high. And that's actually a fourth seal line that eventually gave us the low in January, February 2016. Okay, so that looks like it works, doesn't it? All right. So if you thought that was a bit rough, use the close-only chart. This is on all software platforms have a close-only function. And this particular chart is actually only charting the close of each of these bars. Remember, at the moment, this is a 12-day chart. Each one of the bars on it, which you saw previously, had 12 days of trading in it. So when we look at the close-only chart, have a look what it did at that 1554.6 number. It hit that almost to the tick, and that caused the major rally. And you'll see this continue all the way down. You can see up in November, December 2015, maybe not there, April earlier, no, September, October, I should say. You can see how that close-only line was just bouncing either side of the fourth seal line. That's interesting. The angles I showed you before came from daily bars. In other words, they came from highs and lows of daily bars. Some of them came from the open or high or low or close of a colored bar. And by a colored bar, I mean an inside bar, which is red on Daniel Code charts, or an outside bar, which is gray on Daniel Code charts. And for trading purposes, we treat inside bars as a null or a void. We simply carry forward the last valid signal that we had. But when we get to forecasting time and looking at the fourth seal angles, inside bars are actually signposts to future highs and lows. So I showed you what happens with these lines if you draw them on a daily chart or a 6-day chart or a 12-day chart. Any chart that has open, high, low numbers on it in a bar form. In other words, any bar chart. Look at what happens if you use the close-only chart. And it shouldn't happen, should it? But have a look at the points that this new angle to the right line is running through. It's going from a close-only low through a close-only high, and it's gone to exactly the 2020 high in gold. Extraordinary, isn't it? That's how accurate charts are, which you never get to see unless you understand the Daniel Code. You can forecast these numbers. They will only be support and resistance, but they're the points where charts turn. That's where markets turn. And you can do these for any chart you can think of. Let's go back here now. You can see I've still got the close-only line on, but I'm now showing you both of them. You can see the fourth seal lines that hit the highs and lows. And on the right here, I've added the retracements for gold on our current market. So that's a 12-day chart. And you can see that the market had run down from its July 2020 high, and it had found support at the Daniel Code red line at 1678.9. Now, what we say about all these Daniel Code numbers, the red and black lines, they're retracements of an operating range. The blue lines are extensions of an operating range, and the way they're manufactured is entirely different, but they still work off the same ratios. So you can see this particular market had support at that 1678 line in about January this year. Then you had a little rally up and a few bars down. This is a 12-day chart still. And then you had the flash crash on Sunday night, which look where it went to. It looked like it was a panic-driven sell. Certainly commentators were full of 24,000 contracts sold at a time when the market is least liquid. It looked like what was the point of that? Was it to take out the whole stack of bids? Well, if you actually see it on a Daniel Code chart, it's entirely logical. All of that momentum, which looked so exciting at the time, went exactly to the Daniel Code number and stopped. And that's what's actually controlling markets at these levels of support and resistance, both on a linear basis, going up and down for price, and on an angular basis where we are using a line that is an angle. And by definition, any line that is an angle has qualities of both time and price. Now, I know you'll find this stuff hard to understand and even harder to believe. On the Daniel Code website, we have a category called Chart Archives. And the reason that's there is to record every chart that I've publicly created since we launched the Daniel Code until the website went public in December 2008. 45,000 charts. Take some time and look at them. You'll be hard-pressed to find a market that's ever turned anywhere except at a Daniel Code number. It's the absolute proof that markets are ruled by the Daniel Code, but you don't have to take my word for it. That's what the chart archives are there for you to prove it to yourself. So remember, this is a 12-day chart. You can see that what sort of accuracy would you expect from a 12-day chart? Well, what we say is that to get target recognition on a daily chart, it has to be within 0.1% of the Daniel Code number, regardless of whether it's one of the red or black lines or one of the blue lines. And that's not 1%, that's 0.1%. That's the level of accuracy we require at a target to give us what we call target recognition. Have a look at this rally up, which bounced up off the 1678.9 number. That ran up 1, 2, 3, 4, 5 periods. Where did it stop? Right at the 59% retracement from the low to the high. Exactly. 7 ticks variance at the high. That's much less than 0.1%. That's a fraction of 0.1%. And what about the flash crash that looked so dramatic? Uncontrolled flash crash, distribution, liquidation, all the words you can think of. It stopped with 1 point variance at the flash crash low. 1678.9, the actual low for that bar, which was the panic sell-off on Sunday night. The actual low, 1677.9. The Daniel Code number, 1678.9. 1 point, 10 ticks. That was the variance on a flash crash out of the blue. And that is Daniel Code target recognition. That's what drives the trading of futures. How far is that going to run? It'll stop at a Daniel Code number. Let's have a look here. Let's convert that now to a daily chart. Okay? And what do you get? Exactly the same thing. See where you had tested that low twice? One of them bounced through to the fourth seal line. Up it goes, gets support on the 1678.9 retracement. Up it goes to the high. Handful of ticks off at the high. Down it goes, working its way down quietly. All of a sudden you get the flash crash. The flash crash Sunday night, and there's no volume. Hardly anyone's looking at the market. Quietest time of the week. Where did it go? Exactly 24,000 contracts sold in a very, very short time period. Stops at the Daniel Code number, 1678.9. True low, accurately, exactly off the daily chart. 1677.9, 1 point or 10 ticks. Now that has got to get you thinking, because we see this sort of thing happening all the time. And what you read in commentary and commentators, it's not real. They don't understand that the Daniel Code controls these markets. And all of the commentary about the Sunday night flash crash was this was a panic selling, this was a forced liquidation. Why would someone choose, good question, why would someone choose the worst time of the trading week to try and liquidate 24,000 contracts? Well, it's obviously a forced liquidation for some reason. But even given that, look where the market stopped. Flash crash over a matter of probably less than an hour, but it stops exactly at the Daniel Code number. Incredible, isn't it? It should be, you should be scratching your head saying, wow. And here is another interesting point for you. This is silver. This had the signal on it. It had a TO3 plus sell signal at the high bar back in, let's have a look at this. Here we are. That was Wednesday. Down it went. It had a TO3 plus sell signal on it. Little bar down. Does that tell you anything about trend? Not really. It was too small to tell you much of anything. But the bar before was a TO3 plus sell signal. The probabilities are that market is going down. Where's it going down? Have a look at this thing in detail with me. Just bring up the other chart so I can tell you. And this is silver, and silver is important, not only because it's silver, but also because it is so highly correlated with oil, with the gold. So there's the high on Wednesday. That high was 2609. The Daniel Code blue line's at 2610. 1 point variance, 10 ticks. The next bar, the little bar, and the retracement wasn't on it at the time. It still hadn't even been formed. We've just got a minor low down there. But now we know where the low was. Look where it stopped. Right on the 2511 Daniel Code retracement. That low on Thursday was 2511.5. Now, I repeat, these retracements were not on the chart at the time because they didn't become valid until after we had the final big down bar to create the retracement. But even though this had not been created, the market knew what it was. That low closed almost exactly at 2511. The red line, the slight red line that you're looking at, is the other side. That's actually the retracement from the low to the high. Yet this bar stopped exactly at that number before it had been created, before the bars were there to create it. What happened the very next day? Move on. We're now on Friday. What's the low of Friday's bar? 2420.5. What's the Daniel Code number there? 2419.5. Exactly the same 1 point variance. Again, I repeat, that retracement had not been created. It's not valid to us to see until that low, the final low, is in, and then you can create the retracement. Yet even though that final low had not yet occurred, the market, as it went down, was ticking off Daniel Code numbers. Now, if you can't get the message from that, I can't convince you anymore. Except to say, look at the final bar, the big down low, when that was Sunday night's bar. That low came in, supposedly a flash crash low, at 2229.5. Where's the Daniel Code blue line? 2231. So the low was, the actual low was 2229.5. Let's say 22230. That takes away half a tick. 1 point from there. So this is 15 ticks. The blue line is 15 ticks variance from the true low, which is nothing. This market is trading in the 2000s. 0.1% is 2.2 points. This is 1.5 points. How could it happen? The blue line was there all the time. So were many others that ran straight through. But it stopped in a supposed flash crash within a handful of ticks from the blue line. And that blue line that gave it support was the same, similar methodology to the red lines that you've been looking at over the last 3 or 4 charts. Think about that. Go outside when this is over and think about it. How can the market be getting support at levels before the chart has even, before the bars have even happened? You know, when I talk to you sometimes about I say I'll be happy to teach you the magic and mysteries of the Daniel Code trading system. That's the magic. And we actually see that all the time. When we do put on these numbers, even when we've just waiting for, we've done a retracement to a different low, I go through when I'm teaching people the Daniel Code tutorial and teaching them how to trade, I say, look at it. The market's hit that number. It's saying to us, I know these numbers and I'm tracking them. And that's part of the way that markets talk to us. But until we have the Daniel Code, we didn't have the language. Now we do. And the more you know about this stuff, the more it will amaze you. That, I'm sorry, was the gold chart. I've been at cross purposes here. That was the gold chart that we, the silver chart we've just been looking at. I've got this, I've got it the right way now. This is the gold chart, which is working off the correlated signals from silver. In other words, on the gold chart, we had our Wednesday signal, which is that grey bar that's got an arrow on it saying correlated TO3 plus sell signal. That was a sell signal in silver. It was not a valid sell signal in gold, but we get, because the gold and silver are so highly correlated, you can trade one against the other, or one in the other, I should say. In other words, you can take a sell signal in silver and trade it in gold if you like, and vice versa. You can take a signal in gold and trade it in silver if you like, because they're so highly correlated directionally. Doesn't speak to quantum, but it does speak to directional. In other words, as long as that trade is elected, you can trade it in either market. In the same way, you can trade correlated signals in any of the equities. If you have a signal in the NASDAQ or you want to trade it in the Dow, you can, so long as the signal is elected. In equities, Dow, Russell, NASDAQ, S&P, and Germany stacks are so highly correlated that a signal, Daniel Code signal in any of those markets can be traded in any other. And here you are, have a look at it. Extraordinary stuff, isn't it? So this is actually the flash crash in silver. That low is 1677.9. The blue line was at 1678. 1 tick variance. Extraordinary. And the retracement went on as soon as that low was formed. Where was the first retracement at? 1756.9. What was yesterday's high? 1756.7. Okay. Total target recognition. What happened today? Little push through, and there'll be a reason for that as well. For those of you who know, that's an NR7. Keep it in mind. Okay, we better move on. You've seen this chart. Excuse me. This is the fourth seal angle on the S&P index, the 12-day chart. You can see how it's moving up, chewing into that Daniel Code fourth seal line. I wanted to also alert you to the fact that that's right on a 29 period cycle, basic number in the Daniel Code for time, 29.6. And that comes from the February 20th low, which I talked about in the last webinar. You remember I said, got you to look at it, and I said, but, with something to look at. Well, it's in action now. Okay, so that's going to lead us up to the end, folks. We offer you the Daniel Code tutorial. If you'd like to learn everything about trading, just the sort of thing I've been teaching you and more, and the Daniel Code language of how markets talk to you. I'd be happy to teach you that. And if you want to have aspirations of being a professional trader or a super trader, send me an email and I'll send you some written material and you can think about it as we go along. Remember that the business of trading futures and Forex is not to be right. The business of trading is making money. Everything that we show you at the website is optimized to make money. and that's the business we're in. If you haven't already, folks, you're most welcome to have a free trial. Just go to the website, www.thedanielcode.com. Click on the link for your free trial. If you've already had a free trial sometime in the past, the program will have difficulties recognizing you. In that case, just contact Terry at support@thedanielcode.com, and he will ensure that you're connected and able to access your free trial. Finally, I ask you to look at this disclaimer statement. Take it very seriously. It's very, very easy to lose money trading. I really earnestly suggest you do not use real money trading until you are absolutely confident that you know what you're doing. It's really easy to make money trading as well, but you have to be good at it. In fact, you have to be very, very good at it, because 90% of new traders lose their money in the first 60 days. And I don't want that to happen to you. Learn to trade, be comfortable that you know with what you're doing, and at that stage, then and only then you're ready to go. So that's us for the day, folks. I'm glad that our internet seemed to hang on all right. I haven't had any comments that it's dropped down, so let's hope that you got it all. If not, if you missed any of it, hi Rolf, good to have you with us. Sure, a lot of people came in a bit later today. Good to have you with us, folks. Albert, of course, Alan. Yep. Then, of course, it's here is Steve. Yeah, good. It's been recorded. It'll be posted on the website. Any problems at all, you can view it there then. So thank you for being with us, folks. Good trading. Lots and lots of exciting, really exciting moves coming up in these markets. Pay close attention. We're in a right time frame for really more exciting moves, and we've had some marvelous ones, haven't we? It's great stuff. All the best to you, Murph, and thank you for being with us, folks. Bye-bye for now.